Good morning and welcome to Chartered Mind Academy tutorial. Alright, so today I would like us to this question, go through and then make use of what they want us to do, then bring out our suggested answers to the question. So let's look at this question called Kintampo PLC. The background: on 1st January 2022, Kintampo PLC acquired a building on lease for a non-cancelable period of 4 years at 12 million per annum, payable in arrears. No initial costs were incurred. The agreement contains an option for Kintampo to extend the lease for a further 3 years at 12 million per annum, payable in arrears. On 1st January 2022, Kintampo's incremental borrowing rate was 18 per annum, and Kintampo was not reasonably certain that the option to extend the term will be exercised. However, on 1st January 2023, Kintampo was reasonably certain that the option to extend the term will be exercised due to incremental rentals in the market. Kintampo's incremental borrowing rate was 16 per annum on that date. On 1st July 2023, Kintampo subleased this building under an operating lease for a lease term of 2.5 years at 1.5 million, payable semi-annually in advance. Initial direct costs associated with the sublease amounted to 250,000 required. Advice on how Kintampo should account for the above during the year ended 31st December 2022. Now, they've given us the table for annuity purposes. So you will consider all that in your solutions. All right, so this is the question. So let us go to the board and summarize it and make use of this very. The company name is Kintampo PLC. Okay, so that's the name of the company. All right, so let us look at it. The date of of the lease contract. When was the date of the lease contract? The date of the lease contract is what? It's 1st January 2022. So the lease contract. All right, under the lease contract, they said that annual lease payment is 12 million. Let me hang 3 zeros. So which is 12,000, and times of this lease is how many years? It says they are doing 4 years. Borrowing cost is 18% in the question. This is what the question suggested. Alright. Under this question, they gave us what? An option to vary the lease arrangement, and that was agreed on when? 1st January 2023. And what is the content? Or what is the content in this option? So they've given us what? Option to extend the lease term, and this we call it what? Modification. Under the modification, what did they say? They said that we should maintain the annual lease. Everything is in the question. Annual lease payment, which is 12,000. We will continue paying the 12,000. The term of the lease is what? Additional 3 years. That is what they said in the question. They're giving you that option. Additional further 3 years. Okay. And they said also the borrowing cost at the date when they agreed to do the extension is 16%. All right, so this is what the option also said. Along the line, they also said that the same question also said that on 1st July 2023. It is there. Let's check that. The last paragraph. What happened? There's a sublease. So this is where we have what? Sublease contracts. So under the sublease contract, what is the agreement? I said that the investment receipt from what? From the sublease contract is what? Is 1.5 million, which is 1,500. And they said that the term 2.5 years, which is what? 2.5 years. And this investment receipt is what? They will receive it what? Semi-annually. That is what the question says. They will receive this money semi-annually. And when they said what? Costs associated with the sublease is the initial direct costs associated with the sublease. So initial direct cost is how much? Is 250,000. So that will give 250. This one is the entire period. Well, that is what they said. So this is the summary of the question. So this question has what? Three divisions. We have the main contract, we have what? Option, that's modification of contract, and we also have what? Sublease contract in the same question. All right, so how do we deal with it? Okay, so let me take it one after the other. Okay, so let me handle it this way. All right, so let's start with what? Solution. All right, in the solution, I said that when you receive a question on the leases, you start with what? With your lease liability. So lease liability, you have what? Your annual lease payment. The annual lease payment is what? 12,000. So the period is what? 4 years. So annual lease payment 12,000. Because it's an expected cash outflow, what do? We need to discount it to the present what? Value. So how do you do that? Because a regular payment, we use a formula to determine the expected what? Future cash outflow. So the formula is what? Annuity factor. The formula is what? 1 minus into bracket 1 plus r to the power of negative n, all divided by what? R. So in this instance, we have what? 1 minus into bracket 1 plus, they've given us what? The interest at the beginning, which is 18%. We have what? 0.18 to the power, they said, is 4 years, the beginning of the contract. Then you divide by what? By the interest, which is what? 18%. That gives me 2.69. So when you multiply, what do I get? So I'll get 32280. Okay, so if you are not comfortable with it, with this, they've given us what? The table that you can use to check that. They're giving us an annuity factor. So initially there is 18%. So the annuity factor for 4 years is what? When you look at it, annuity present value factor is what? 2.90. So this becomes our present value for the what? For the lease liability. Then we have moved towards second year. I move my second step. I'll find my what? Right of use of asset. So my right of use of assets is what? Is my lease liability, which is how much? 3,228. If there is no additional cost, indirect cost, or direct cost, and other incentive, then my right of use of assets value is the same as what? As my lease liability. Third step is what? Calculate your depreciation. Depreciation, I'll have my right of use of asset, which is how much? 3,228. The depreciation for year 1 is what? 32280 divided by what? 4 years. That is what? 8070. So no less, what do I have? 2421 0. So this becomes the carrying amount. We cannot further calculate depreciation for what? For the second year. So this is what? Year one. We cannot further calculate it because of what? What year? Because in the question they said that there is going to be an extension of what? Of the lease agreement by 1 year, right? Sorry, they are going to extend the lease agreement after year one. When you read it, watch it here. They said that on 1st January 2020, Kintampo incremental borrowing rate was 18% per annum, and Kintampo was not reasonably certain that the option to extend the term will be exercised. However, on 1st January 2023, Kintampo was reasonably certain that the option to extend the term would be exercised due to increasing rentals in the market. Kintampo's incremental borrowing rate was 16% per annum on that date. Simple. So you can clearly see that the contract was on 1st January 2022, and they agreed to do the extension on 1st January 2023. How many years? 1 year. So if the agreement is to extend the lease agreement after 1 year, then when you are calculating your depreciation here, calculate your depreciation only 1 year, because the terms of what agreement will change after 1 year. So for that reason, calculate your depreciation just for 1 year, because we will do some adjustments. If the adjustment will be equally, they said that the adjustment is going to be in what? In year 2 or after year 2. We have to depreciate the assets for only 2 years. If the adjustment is here, it will be done after year 3, then we have to calculate depreciation up to year 3. That is how. So when you look at this one, the extension will be done after what? After 1 year. So depreciate the asset up to 1 year. So after depreciation is what is determined, then we move to what? The fourth step is what? Calculate for amortization. What? Write your amortization schedule or table. All right. So this is arrears lease payment. So you start for your years, your balance brought forward, your interest. The interest is what? 18% at the beginning. Then our regular lease payment. Then we finalize it with what? Our closing balance carried on. Okay, so the question says we should do what? We should do 2022, 2023. All right, so that is what the question asks us to do. Okay, so how do we start it? We will start it with what? With our opening balance, which is coming from our lease liability. How much is our lease liability? Our lease liability is what? 32280. 32280. Then we calculate our interest on that. So 32280 plus our interest is what? 18%. So year one we will have what? 5810. How much are we paying annually on our lease? Is what? 12,000. There you put 12,000 here. What do we have at the close? So at the close we will have what? 26009. 26090. All right. So this will be our closing balance. Now let us look at this question. They said that after 2022, in January 2023, there is a modification. Watch it. I'll summarize it here. Modification is on 1st January 2023. The options are what you've seen below here. Read the question as well. They said that, however, on 1st January 2020, Kintampo was reasonably certain that the option to extend the term will be exercised. You underline it, exercise, due to what? Incremental rentals in the market. So it means they are going to exercise it in from 1st January 2023. So if so, 2022 has ended. You already have your closing balance in 2023, in 2022. Right, you already have your so that means that in 2023 our closing balance will be affected. That's the main idea. So in 2023 they said that agreement happened on 1st January 2023. That is when the agreement happened. 2022 has also ended. So in effect, 2023, when are we paying the liability? We are paying it when? At the end of December 2023. So what do? When you come here, you will have to find before the amendment. What is your closing balance? So at all times, you should be very mindful about this, that when are they asking you to do the amendment? Ask yourself. They are asking you to do the amendment after the end of 2022. If so, in the year 2023, have what we call before and after amendment or revision. Have this so that it will help you in your liabilities over the period. So when you look at this, before the amendment, what is our closing balance for that year? And after the amendment, what is our closing balance for that year? For the amendments, because 2023, we have to calculate. We are now coming to calculate for our liability for 2023. They said that we should do the amendment. The agreement was made in 1st January 2023. If so, then we have to calculate our lease liability for 2023. Before then, we do the amendment subsequently. So here, the 2023 has not ended. It just began. During the 1st January 2023. So for that reason, what is the lease liability for 2023 before we do the amendment? That's what we call before the revised, right? But the agreement was made from the 1st January 2023, and the payment of this liability is not at the beginning, it's at the end of the accounting year. What is the liability at the end of accounting year before the revision? Because the agreement reached at the beginning of accounting year will not automatically revise it immediately, because it has to go to the end of the accounting year before the amendment is revised. So here you will have before revision or amendment, which is 2023. So you take note of that. Then it will come here after revision, which is 2023, the same year 2023. So if so, then let us prepare 2023 before revision. We have opening balance to be 26090. Then we calculate our lease liability interest. We have 0.18 696 18 786. So now we have our balance here. Now we have our balance at the end of the account year. We can now revise, because agreement was reached in 1st January. The payment is made at the end of the accounting year. So at the end of the day, you need to know your balance at the end of the accounting year before you revise. Is the beginning of accounting year is when the agreement was reached. If so, the payment will be made at the end of the accounting year. Therefore, accounting year 2023, you will have to continue with the old contract before when the accounting year ends. Before then, you will consider the revision at the end of the accounting year 2023 at the same time. All right, so let's go into the amendment 2023 as they did. So what do we have here? So you have our modification. So under our modification, what are we modifying? They have already told us that the annual lease will remain the same. Annual lease will remain the same, 12,000. Annual lease payment will remain the same, 12,000. Lease term at the beginning was what? Was 4 years. And we've already spent 1 year already before the amendment. So when you less it, what do we have? You will have what? 3 years plus how much year do they want us what to add? So when we come to one, they say we should add how many years? The standard, they say we should add 3 years in agreement. Okay, then we add what? 3 years. That gives us what? 6 years as revised. And then the lease borrowing cost of the company now is now how much? 16%. So here, this will affect the old lease payment. So how is it affecting it? It will affect because the interest rate has changed, the number of years has changed. So for that reason, we need to recalculate our new lease liability again. So you come here 5. So you have your lease liability. So your lease you start before your annual lease payment, which is what? 12,000. Then you have you find your annuity factor, which is what? You follow the formula. The formula is what? 1 minus 1 plus R. The power of now the year is what? 6 years. So you have your R. So with this you'll have what? 1 plus into bracket 1 plus 0.16. Interest rates has also changed. How about 0.16? What do we have? We can also use the table to get whatever we are looking for. So if you are not comfortable with the formula and you still want to use the table, you have the way to use the table. Now, when you look at the table, the number of years is what? Is 6. Then the interest is what? Is 16%. So you come under it, you will see it here. This one, you will see it here, 3.68. Okay. So that gives you what? That gives me 3.6. Okay, so you can also punch it on your calculator and you can arrive at the same answer. Rather than you multiply, then you will get your present value. So it gives me what? 4,208. All right. So this is my new lease liability. So when you get your new lease liability, so this new lease liability is what? Is as at what? 2023. Okay, so this is how you do it. So we call it, then you come and do what we call your remeasurement. Okay, so how do we get our remeasurement? You will start with your new lease liability. New lease liability is how much? 4,208. Then we have our closing balance as at when? 2020, previous years closing balance 2022. But this is 2023. So the 2022, what is the closing balance as at that? It is 26090. Yeah, what? 26090. What do we have? I guess me 18118. So this 18118 will be adjusted to right of use of assets. So you say adjust to right of use of assets. Okay. So now that we've had all that we wanted, what do we do next? We can now prepare our after revision. So after revision 2023, our lease liability will be what? Will be the new lease liability that what we have prepared, which is what? 44208. 44208. Also remember, before revision, you have your closing balance of 26090 before the revision. Now, this agreement was what? Was settled in 1st January 2023. So before the revision, your closing balance should give you this in 2023. Before now, you will come and then what? Use the new lease liability to also prepare the what? The closing balance at the end of what? At the end of 2023. So beginning of 2023, our closing balance was 18786. At the end, it will give you what? 4420. Okay, so here, remember, after the revision of 2023 closing balance, our interest now has changed to 16%. Remember that. It has what? It has now changed to 16%. So you have what? 44208 times 0.16. So that gives me what? 7073. Our lease payment did not change. Still 12 million. So what do we have? 39281. Okay, so we are done with it. What next? I have to go and then adjust my what? Adjust the right of use of asset with 18118. So here you say adjust. The figure is what? 18118. Okay, 18118. Alright, so 2022. This is your what? Your current amount, your new current amount, your what? 24210 plus 181111. So that gives me what? 42328. For then I can now calculate my new what? Depreciation, which is what? 42328, all divided by 6 years. Now our useful life has changed. That gives you what? 7054. Let me say 7055. Approximated. All right. 42328. 35 27. So this is what? Year 2, which is 2023. Okay, so that is it. Our depreciation. We've also calculated all these things. All right, so we are done with what? With the initial and then subsequent. So let's move to sublease contracts. Okay, so when you look at the sublease contracts, what do they have? They have what? Expected revenue or investment in what? In sublease, which is what? 1,500 payable or receivable. Semi-annually. Okay, the term is how many years? 3.5 years. If so, you can know your total receivables. So here, total receivable will be how much? So you will have what? They say it's semi-annually and it is 2 years. In leases, we count the number of payments. It's the number of payment that count. It's not about, because usually we are given the term of what? Of agreement being payable every 1 year. So we most of the time we don't avert our mind that is the number of time that we pay, not the per annum per se. So here, when you look at this one, the number of time that you will receive this 1,500, that count. So here, realize that they say it's 2 years, 6 months. So it means year one, they will receive what? 2 times of this month, because it's semi-annually. So every half of a year, they will receive one. Then the end of the year, they will receive another. They will receive 2 times. So year 2, they will also receive what? 2 times. And year 3, they will receive what? They will receive 1 time. Right. So that is the what? That is how the receivable under this sublease contract is. So the total receivable will be 1,500. So when you add it, it will be what? It will be 5 times receivable. So if you want to know the total receivables, it will be what? It will be 1,500 times what? Times 5. That will give you what? Total receivables. So which is what? 7,500 for the total receivables. And they also said that there's what? There is indirect cost. Now this indirect cost is for the entire period. For the entire period, which is 250. After you've analyzed it here, what kind of sublease contract is this? As in my earlier tutorial, I said that under sublease contract, we have what? We have ties. Now I will mention these two arrangements where you have what? Full sublease contract, and then you have what? Partial sublease contract. So the full sublease contract here means that under the full sublease contract, it means the entire asset is what? Is sublease. But when you come to what? Partial, it means part of the asset is what? Is sublease. Part of the asset is sublease. So simply put, example, with full sublease contract, example, if A Limited sublease its asset to Y Limited. If Y Limited sublease the asset to X Limited. So here this is what? Sublease. So if Y Limited sublease the asset they lead from what? So this lease contract. So if Y Limited sublease the asset they took from K Limited to X Limited, we call this sublease. Now, this what kind of sublease is that? Did they lease all the assets to X Limited? So that's what we call full sublease contract. So here it means they've subleased 100% all the assets they took from X Limited to K Limited to X Limited. Right? So here that's what to say the entire asset is what? Is sublease. Accounting for it, I've already dealt with it in my other tutorial. If you want to know how the full asset or full sublease is what is accounted for, go and watch it. Now the second one is what? Partial. So if A Limited lease its asset to Y Limited. Now, under this arrangement, Y Limited also sublease the asset to what? X Limited. So it's what? Sublease. With this one, only portion of the asset is what? Is sublease. So this is what we call partial. Now, when you look at this question, it is what? It is partial. They sublease only portion of the asset to other company, right? So when you read it, you realize that it's only a portion that was sublease. So let us look at it. It said what? It's only a portion. So on 1st July, Kintampo sublease this building under an operating lease for a lease term of 2.5 years at what? 1.5 million, payable semi-annually in advance. So have you seen how much he is receiving? In order to know whether it is full or partial, one, look at the receivable and look at the years involved. So in order to know if it is partial or what, or full sublease. One, if the annual lease annual lease payment under the sublease is less than the lease contract, then it is what? It is partial sublease, and vice versa. Again, if the number of years of sublease is equal to the lease contract, then it is most likely to be full sublease. Okay, so these elements are very, very important. So when you look at our instance here, you will realize that the annual lease payment, which is what? Lease contract, is how much? 12 million. Now, annual receipts payment, which is what? Sublease, is how much? 1,500. So you can know that this is what? Actually, this is what? This is a partial, because the sublease receipt is what? Is less than the actual lease contract, and then the years or the term. You realize that the lease contract is what? Is now 6 years as amended, and then sublease is how much? The sublease is 2.5 years. Okay, so clearly this is what? Partial sublease. Okay, so let's go into the solution. So how do we report under partial sublease? So under partial sublease, this is how we report it. So one, or let me say you report the what? The receivables annually. Receivables is what? Semi-annually. They receive it semi-annually, and it is how much? 1,500. So when we look at the date, when are they receiving it? The contract was entered in what? 1st July 2023. So they will receive from 1st July 2023 to 31st December 2023. So they will receive this money. This is the receivable for how much they are going to receive from what? From this arrangement. So they will receive only one tranche. So the cost associated, that one too, because it is semi-annually, you do what? You amortize to the period of the sublease, and expense it in the P&L. So the total cost is how much? The cost is 250. Then you divide by what? How many times are they going to receive the sublease money? They are going to receive 5 times. So you amortize it 5 times. So 250. 250 divided by 5. That gives you 50. So that is all that it will do in this regard. All right. When you are done, you see you report this money, then the balance will go as for deferred cost. Deferred will go as deferred cost. So the deferred cost is what? The remainder of the cost. You see, the remainder of the cost will form part of what? Will form part of right of use of assets in the statement of financial position. So that is how we treat partial lease contract. Okay, so let's move to our 6 here. So we start with what? Your profit and loss extracts. Okay, so Here they say we should report 2022 and then 2023. So how do we go about? We start with our interest we are paying annually. So year one, the interest is how much? The interest is what? 5, 8, 10. 5, 8, 10. Year two, what is the interest? The interest at the end of the accounting year for year two, which is 2023, is 7073. Don't go and pick the before. Take note of that. Don't take the before, but take what? After. That is the end of the accounting year. 7073. 7073. Okay. So after that, we do our what? We do our, remember, we have what? We have an income to receive here. So the income is from what? From what? Sublease income, right? Sublease income or what? Either you can go income or rental. And it is how much? Every year, how much are we receiving? We are receiving 1,500. And the agreement happened in 2023. And again, therefore, there is cost, which is what the amortization of what of the cost. So the amortization is how much? As I calculated, amortization was 50. So you bring that one here, you put it in bracket. Good. So when you are done, then you do your work, your depreciation here. Now, how much is our depreciation for year one? Our depreciation for the first year was how much? 80, 70. 80, 70. And year 3, 2023, as amended, our depreciation is how much? Let's check that. That is 7055. 7055. Okay. So we are done. All the entry has been made. Then we go to our what? Our statement of financial position. So our statement of financial position follows same. So 2022 and 2023. So with this, we'll start with our what? Our non-current assets, where we have our right of use of assets. Our right of use of assets will bring the balances, closing balances. So year one, the closing balance is how much? 24210. So we have what? 24210. And year two closing balance is how much? 3527. 3527. Right. Let me confirm again. Okay, so that is it. Because we have what? We have liability, or we have costs associated with what? With the asset that what we sublease. It will affect the what? Right of use of us. So we call it what? Deferred costs here. And this cost is what? 250. We've already paid what? 50. So the rest will what? Will come to us is under 2023. So it will come in 200. So that is it about that. When you are done there, you come and do your what? Your liabilities. Under our liability, we have what? Non-current liability. So we have our lease obligation. So we also have our current. We have what? Our lease obligation. All right. So now we know this. How do we pick our values here? Now, before you do this, let me give you a trick here to also consider. Here, before you do that, do this. It can also help you. You will have your total liability here. You have your total liability. You will have your non-current liability. And you have your current liability. You can have your years. Okay, so this is how it is done. It will help you to identify the item what you should pick in this instance. So you will start for the years. Year one is for 2022, and you have for 2023. Okay. Okay. So because this is arrears, let us add 1 year to the table. So let us add 1 year to the table because it is in arrears. Let us add 1 year to the table. So that's 2024. Now, because it is in arrears, when it's in arrears, when we are doing leases and it is in arrears lease payment, if they ask you to do 2 years accounting, add 1 year to it. Now your closing here becomes an opening in what? In the subsequent years. All right, the interest in this one is how many years? The interest is for 16%. So if it is 16% times how much? 39,281. So here it gives me 36,284.9, and this payment will not change. 39,281. Okay, so here will give me 3,376.6. Okay, so 76,337.66. Good. So that is it. Now that we have it here, we are good to go. Okay, so follow the conversation here. Let's go to the table that I wanted to do. Right, so you pick your total liability for 2023. 2022. What is the total liability for 2023? 2022 total liability is 2090. 2090. 2023 is how much? It is 3928, not 18786. No, it is what? It is 39281. That is 39281. And 2024 is how much? It's 3766. So that becomes your total liability. We are coming to determine our long-term liabilities. Now, how do we determine our long-term or non-current liabilities? Well, the total liability, I've already indicated it here already. We already know our total liabilities to be what? To be the liability that's what ended the year. So 2609 ended the year, 3928 ended the year, and 33766 ended the year. Now let's look at our long-term liabilities. So our long-term liabilities are, which liabilities are we going to choose out of this when you are preparing lease payment in arrears? We all know that when you are coming to pick the non-current liabilities and arrears payment, we pick the liabilities which are the second year in the contract. So here, year one is not what you have. Why so? Because we said that in accounting, when you have liability, the liability is divided into into current and non-current. So for that reason, when you use 26,090 as your non-current liability, these non-current liabilities are not going to pay at once. They are going to pay in tranches. This is amortization. So how do they pay? They pay it when they fall due, and they pay it based on what? Based on the amortized schedule that they are going to pay. If so, then how much are we paying in a subsequent year to come, and how much will be left for the long term to be paid off? That's why we always say that when you choose when you are choosing your long term or non-current liabilities, pick the second year, because the difference between this one and this one will give you the current year, because These two 26,000 have to be what? Have to be separated between current and non-current. So when you pick it, then you less the second year, it will give you non-current. So when it gives you non-current, then you pick the second year as the long term, and then the difference will give you what? The current. Because when you add the current liability to the second year, when you add it will give you the first year total liability. That is the idea. Now that this is also understood, so how do we go about to get our long-term liability? So the long-term liability subsequently is going to be what? 18,786. So non-current will be what? 18,786. 86. Okay. Then 2020, then 2024. Which one is going to be our long-term liability? Because with 2023 has already been selected, right? Or non-current liability, it has already been selected, which is 18786. Not 3, no, not that one. It is what is the 18786. That is what before revision, that balance is what we are what is considered. Then the 2024 closing balance is what? 33766. Okay. So you come here. 33766. So when you are done, then you find the difference. So the difference, you have 720, 90. That one is was 26,090. Okay. So 26,090. Okay. Minus 18,786. So this gives me 7,274. And then I'll less this one, which is what? 239,281 minus 33766. Okay, so that gives me what? 5515. Okay, so that is it for the period. All right. So you also have another option if you don't want to go through this. All you have to do is that if you want your long-term liability, just come to the second year. If it is amendments, just come to the second year, pick the first, you do the before revision. Before revision balance is what you consider. You pick it, which is 18,786. You come here for that year long term, which is 18,786. You go there again, then you pick, well, 2023 has already been what? Had already been taken, right? So when you come here, you take note of what? Of that year 2023. All right, it has already been taken care of. Then you move to what? Year 4, which is 33766. And you come and pick that out. 766. Okay. Then you are done. So when you are done, then your current liability is the difference between the 2 years. So the difference between when you come to current, the difference between 26090 minus the second year, which is 18,786, will give you your current liability. And you come to the 2024, you will pick what is the difference between the closing for 2023, which is what? 39,281 minus 337, right? 66. So that will also give you what? Your current liabilities. Okay. So at the end, what amount do I have? I have what? Current liability. So first one is how much? 7,274. And then there's other one is what? 5515. Okay. So that is all about this question. That is all about this question. Thank you very much for your time.